Welcome back. I am JW, and this is the RAFON Report. RAFON, the Rise and Fall of Nations. This is program number 5 on our YouTube string. Again, you can find us on Twitter. We have a Facebook page and a Facebook group. We are transitioning some things over to Patreon. And of course, you can find us here on YouTube. And don't forget to stop by RAFONReport.com. Today's subject is definitely an interesting one that I have been kind of investigating for a pretty long time. How many remember Monopoly? How many of you still play it? Well, the Monopoly we're going to be discussing today isn't really a game, but I'm sure y'all remember Uncle Milton Pennybags, something like that. Did you know he was fashioned after a real-life individual? He's going to play a big part in what we're talking about today. That's Mr. J.P. Morgan. Created U.S. Steel, J.P. Morgan and Associates, and all kinds of stuff. He's going to be interwoven throughout this. Again, what we're discussing today is a monopoly, but it's not a game. I guess in some ways, maybe to the players, it's somewhat of a game, but it's a very dangerous one because this institution affects every single person on Earth that uses their different currencies. Look at that big old building. That is the New York headquarters of the Federal Reserve. That is the subject of our discussion and what we're going to be looking into. What is the Federal Reserve? How does it work? Can we put any conspiracy theories to rest on it? Let's dig in. First of all, to begin with, the Federal Reserve is a central bank, and that shouldn't be too difficult. Just consider the Bank of England. Founded 1694, 17th century. Even that wasn't really the beginning of a central bank. But this Federal Reserve, well, it wasn't even America's first shot with a central bank. We had the first Bank of the United States. They had a 20-year charter from 1791 to 1811. In that 20-year term, they created a lot of the need of what would eventually become the Second Bank of the United States. Also a 20-year charter from 1816 to 1836. Now you notice there's a 5-year gap in there. Well, America was tied up with a couple of little wars, but that's a subject for another broadcast. This guy right here is the 7th President of the United States, Andrew Jackson. He despised the idea of a central bank. It's not because of a bunch of things that he imagined in his head or just from listening to the controlling voices around him. Mr. Jackson was a student of history, and he was well aware of the central bank's history over in Europe. Most of you are probably familiar with him better on this little picture right here on that $20 bill. A lot of us carry around in our pocket. This is what he had to say about the bank, speaking to the, at the time, future President Martin Van Buren. He said, "The bank, Mr. Van Buren, is trying to kill me, but I will kill it." Andrew Jackson to Martin Van Buren, 1832. This is what Mr. Jackson saw as a central bank. Because banks buy up private interests, and they expand, and they get their little tentacles into a whole lot of things that they really shouldn't. And so that was what somebody had put together representing him trying to kill this multi-headed beast. Again, dealing back with the Second Bank of the United States, you see their term there was 1816 to 1836. Mr. Jackson intervened earlier than this because there was an attempt to renew the charter before this one ran out. I believe that was in 1834, but that didn't happen. And again, Mr. Andrew Jackson on his tombstone today says, "I killed the bank." Sort of. We went approximately 80 years without one, and then somehow we wound up with this institution. But again, what is the Federal Reserve? I don't think anybody tells the story better than this guy, G. Edward Griffin. He literally wrote the book on this. It's called The Creature from Jekyll Island. Nice little place just off the coast of the state of Georgia, Brunswick, Georgia, I believe. Nice resort. Big, expensive place. Hope you have a lot of money. But again, what we're going to discuss today is a monopoly, criminal cabal in my book, mafia, financial mafia, central banks all over the world. Many of them have some of the same fingers in the pot. But this one To be created in the United States, it required something that Mr. Griffin in his book called the illusion of diffusion, and that is the fake decentralization of our primary banking cabal. Because at the time, most of the largest banks in the United States were headquartered in New York City, and that presented a problem for a whole bunch of reasons. In order to be able to craft a solution, something you're going to have to sell to the public is again this decentralization. But is that really what they did? Our story begins with these 7 individuals here. I'll be giving a little biography on them, not necessarily in this order. Paul Warburg, Senator Nelson Aldrich, Frank Vanderlip, Benjamin Strong, Henry Davidson, Charles Norton, and Abel Andrews. And again, remember, things tie back here to Mr. J.P. Morgan in many ways. But now we have the big secret. And why was this needing to be a big secret? Well, again, when you consider some of the players that were involved there, you have not only a sitting senator, you had another gentleman in the group that was currently also employed in the United States federal government, and then you have a bunch of the big bankers. They were the boogeymen. They were the bad guys. So why would you want to put together a group with the people that caused the problem to begin with? Herein tells another part of our story. At the time, this big banking consortium, or whatever you want to call it, that was being done at the time in as far as consolidation, everybody getting together, working together, trying to build this big beast, it came to be known as the Money Trust, and that was something that Mr. Andrew Jackson ran on in his stump speeches, was that he was going to break the Money Trust. And on the surface, he did, sort of. Again, referring back to what he saw. This, again, wasn't imagination. This is what he knew from history. Senator Aldrich had his own private train car. They hatched a plan, these 7 men. I believe one of them also brought their secretary along. But they all had to meet at this train car, but they all had to meet there separately. If they were, of course, to run into each other there on the train platform, they were all supposed to act as if they did not know each other. None of them used their real names. They all used maybe their first names. There was 2 of them that, since they thought they were on the right track, they chose the names of Wilbur and Orville, the Wright brothers. So they all get on this train. Another one of them, I don't remember exactly who, he was seen carrying a shotgun case. And it turns out in a book that he later wrote, he had never fired a gun in his life. He carried the gun just in case he was asked what he was doing while he was going out duck hunting. But again, these gentlemen meet up on the train somewhere off in New Jersey, and they take this long trip down to the state of Georgia. Senator Aldrich pretty much plays into a lot of the backdrop legislation that had been going on for many years prior to the passage of the Federal Reserve. He was a very, very big-time player. He was well-known, well-established in Congress, well-established in several committees. And then we have A. Pitt Andrew. Abraham Pitt Andrew Jr., economist, at one point director of the U.S. Mint, and was also America's first assistant secretary to the Treasury from 1910 to 1912. By the way, the meeting on Jekyll Island was also 1910. So as you can see, immediately some of our players are already lined up well in advance. And then we have another banker, Charles Norton, who was president of the First National Bank of New York, which was dominated by J.P. Morgan. We then have Benjamin Strong, who just happened to become the first head of the Federal Reserve. And then we have Mr. Frank Vanderlip, also a banker, president of National City Bank of New York. Now you know them as Citibank. From 1909 to 1919, prior to the 1910 meeting on Jekyll Island. Already in the game, already part of the problem, one of the gang of 7, if you will, that's going to propose a solution, in part for the problems that he helped create. So you can figure that one out, let me know. And we have Mr. Banker Henry Davidson. In 1909, again, prior to our Jekyll Island meeting, he became a senior partner at J.P. Morgan and Company. And then we have this gentleman here, Paul Warburg. Family was already in banking and finance back in Hamburg, Germany. He came to the United States. I believe he started out on the West Coast. At one point, he was the director of Wells Fargo, which was primarily a West Coast enterprise. He made his way to New York City in the big banking circles. He wound up marrying the daughter of the gentleman that started the investment firm Kuhn, Loeb and Company. Again, major cross dealings between banking institutions, again involving Mr. J.P. Morgan. Interesting little factoid here about Mr. Paul Warburg. Some of you might remember him from this right here, Little Orphan Annie. It was on the radio, it was on television, had a comic strip. Well, he was Daddy Warbucks. So we kind of have two comic strip characters here in our real live gang of 7 plus Mr. Morgan. So again, here's your primary 7 that went on the trip. And you can bet Mr. Morgan was involved. Here we are. We have this creature of Jekyll Island. Gentlemen are there for approximately 9 days, I believe history records. Of course, a day there and a day back on the train. And what they had to accomplish here was to try to stem the tide of a lot of the problems that their institutions had been creating for quite some time. While we have what took place in those meetings for that 9 days on Jekyll Island, this was not an organic movement that sprang up overnight. This had been in the works for quite some time. Now, if I mention the phrase the Great Depression, most people that are at least familiar with it know that's roughly 1929 to 1939. But America had a Great Depression long before that. And that was the Great Depression of 1893, which caused the Panic of 1893. And it's weird that they call this the Great Depression of 1893, the Panic of 1893, when it lasted until 1897. Runs on the bank were notorious at these times of financial upheaval across the country because of the power players and the manipulations that they were doing. You also have, there's that Aldrich name again, Senator Aldrich. Again, he was involved in a lot of these things leading up to what would become Jekyll Island. The Aldrich-Veland Act, responding to the Panic of 1907. In this beast from Jekyll Island, we have the National Monetary Commission, created within the Aldrich-Veland Act of 1908, so interconnected still. We have the Payne-Aldrich, there's Mr. Aldrich again, Tariff Act of 1909. If I understand that correctly, what that was at the time, European, foreign pieces of art being imported into the United States were getting some pretty heavy tariffs on them. This act right here did away with that. And it turns out that brought in an explosion of art pieces being brought into the United States and numerous museums being built around the country. So they weren't all bad characters, but prior to the passage of the Federal Reserve Act, it just happened to be within the same year, we also had the passage of the 16th Amendment. We also all had the Revenue Act of 1913. Together, these created what we know as the income tax. Now, that's not the first time that income tax had been levied against Americans, but this was one that wasn't going away. Had a couple of, minor league failures prior. Again, Mr. Senator Nelson Aldrich being one of the primary players here because of his handling of things and being involved again with so much at so many different levels with his own connections. And it's not just family, it's business associates, people maybe that he went to school with, etc. We have this beast, and what it does is it sets monetary policy, but yet we were somewhat led to believe with this illusion of the illusion of diffusion, and with this gang out here on the island look at all of the previous legislation that was kind of tackling previous financial difficulties that in part were due to individuals such as those shown here and others with private banking industries. Mr. Aldrich had an ego about as big as his bank account. And see, he wanted to be the one to present this wonderful thing to Congress, to the President of the United States. Well, it just so turns out this guy, Mr. Frank Vanderlip, he warned Mr. Aldrich against this and said it was a very bad idea because a lot of people at the time were convinced that this big money trust problem was a Republican creation. The general public nor Congress were just going to accept a remedy from the supposed same entities that created it to begin with. But Mr. Aldrich, again, his ego was as big as his bank account, and he went forward with it and was summarily turned down. But all hope was not yet lost. Again, this was believed to be largely a Republican big business problem. What they did was they got a little crafty, as politicians always do. They brought in a couple of Democrats to help them along the way. They brought in Mr. Carter Glass, House Representative, very well-known, liked Democrat. And then they also brought in Senator Robert Latham Owen. And again, what is being accomplished here to repackage and remanufacture what Senator Aldrich presented for their approval and was summarily turned down. So they come up with their own little thing and they called it the Glass-Owen Bill, which was nothing more than Democrat deception to mask the Federal Reserve Act. And again, this was supposed to be a big bad beast of the Republicans, but now you have a couple of Democrats putting their stamp on this and saying, look, it's a good thing. Government players and their politicians, they lead us down the wrong path on numerous occasions. Here's one thing that they did build in so that anything that may have been temporarily scrubbed to be able to get approval and passage of the Federal Reserve Act was they also included Section 30. The right to alter, amend, or repeal this act is expressly reserved. We wind up going through the motions. We wind up getting the Federal Reserve Act signed into law by Democrat President Woodrow Wilson, December 23rd, 1913. One thing I want to address here, I noticed going back probably 2009, 2010, I started picking up some chatter on the internet that the Federal Reserve's 100-year charter was coming up and would be done in 2013. Now, I'm below the description of this video, and I've got a slide coming up here as well. It's going to give you the link to where you can go read the original text. And I have read it on several occasions, and I find nothing in there to indicate this 100-year charter. So if it's there, it's not. I don't know how else to put that. Again, this was signed into law as an act of legislation, and for the life of me, I can't think of another one that has a built-in termination date. Acts are permanent legislation unless further amended or rescinded. Here you have, I don't know, this was necessarily the particular group that was there to sign this piece of legislation, but again, this depicts Mr. Wilson there sitting there signing legislation. Originally, there were going to be 12 different banks throughout the country. Now again, we had what was supposed to be the illusion of diffusion here by separating all of these big banks so they couldn't work together. And the thing that kind of throws me off here is, okay, so you put together 12 mini banks, but they're all Federal Reserve. They're all the same thing. Here's where you get a little tricky also into whether or not the Federal Reserve is a private bank. Well, there's a lot of argument there, but I have to believe it's more of a co-op with the federal government, because the president not only nominates the chair of the Fed, he also nominates the entire board of governors, and that's a total of 7 positions, including the chair. If this is a private entity, why is the president nominating the top 7 people involved? Makes absolutely no sense. But again, it was supposed to start out with these 12 locations: Atlanta, Georgia; Boston, Massachusetts; Chicago, Illinois; Cleveland, Ohio; Dallas, Texas; Kansas City, Missouri; Minneapolis, Minnesota; New York, New York; Philadelphia, Pennsylvania; Richmond, Virginia; San Francisco, California; and St. Louis, Missouri. Well, today there's 24 branches. How many more are we going to wind up with in another 100 years? This gentleman right here, Representative Lindbergh from Minnesota, name might sound familiar to some of you. That's because this is the father of Lucky Lindy, Charles Lindbergh, the aviation whiz. And he had this to say the night before this was done, before this act was signed by Woodrow Wilson. When the president signs this act, Federal Reserve Act of 1913, the invisible government by the money power, proven to exist by the monetary trust investigation, will be legalized. The new law will create inflation whenever the trust wants inflation, and from now on, depressions will be scientifically created. And they are. They're the ones that determine interest rates. They're the one that determines how much of their notes. Notice, it's not money. It's a Federal Reserve note. It's a debt instrument. It says right on it. They're supposed to control the flow of this money in the public, but they like to play games with it depending on the current agenda. And again, that can change with the president. Inner workings with further conspiracy theory considerations. But now, look what President Woodrow Wilson had to say about this 6 short years after signing it into law. I am a most unhappy man. I have unwittingly ruined my country. A great industrial nation is now controlled by its system of credit. We are no longer a government of free opinion, no longer a government by conviction and the vote of the majority, but a government by the opinion and duress of a small group of dominant men. Woodrow Wilson, 1919. But here we are, 106 years later, still dealing with the Fed. How this works, and there's a lot that can be gone into this and break it down in further programs, but they would be, I would have to bust them up in different sections. But this is basically how it works. Congress needs money. They contact the Treasury. Treasury contacts the Federal Reserve. Federal Reserve says, okay. The Mint produces the money and gives it to Congress, though most of it today is just digits on a computer somewhere. But that's your basic chain of how it works. To add insult to injury in this creature, and how they make so much more money, is through what's called fractional reserve lending, which is basically creating money out of thin air. Did you know that in the print, at the Mint, I should say, that it costs almost the exact same money to print a sheet of $1 bills that it does to print a sheet of $100 bills? And they just, they figure out how many of each bill they want out there on the market, and they produce the supply or they pull the supply back in. But fractional reserve lending, here's a simple scenario to tell you how it works. Okay, assuming that they do keep a 10% reserve. $1,000 that they create actually produces $9,000 in loans, for which they're getting interest and payments. It just boggles the mind, because if any private individuals tried to do this, we'd be sitting in prison. So again, this is simply a second layer of this many-headed beast that is our financial institution in the United States. Again, this is where you can go to read the text of the Federal Reserve Act. Again, there is a link underneath the video in the description. Again, we do appreciate you guys stopping by and listening to us. We appreciate your input. And if you do like what you're hearing, please don't forget to like, share, subscribe, comment, and hit that notification bell. Again, this is JW. This is the RAFON Report. We're dismantling the beast, one piece at a time. God bless America. God bless you. We'll see you next time.